Welcome back, and we are now hearing more about the extended cycle in the Bitcoin and crypto markets, with Cryptoviser saying that Bitcoin cycle peak is expected by 2026, going completely against the fear and greed index, going against the market of psychology charts, and going against the historical data based on the Bitcoin halving tracker. Now, we've covered a lot of this in the past, but there's a lot of new sentiment about where we are in the cycle and where we are going in the cycle. And I'm going to show you in today's video both sides. The cycle that we are either at or near or already have hit the top, or the thesis that we are going into an extended cycle and that crypto bull market will likely play out as it did in previous cycles, as Raoul Pal says. And even one analysis firm expecting a long and exhausting crypto bull market, with Bitcoin hitting at least $200,000 by early 2026. And so we're going to break it all down. We're going to talk about what the sentiment in the market is, what is going on in the general economy, and more importantly, what the data shows us, because this is a data-driven channel and we upload every single day. So make sure you guys are subscribed to the channel. We love new channel subscribers. You can also give the video a free thumbs up. And if you want to help support the channel, click the join button or subscribe plus button down below here on YouTube to learn more about becoming a channel member for as little as $1.99 a month. But other than that, let's get into today's video. We're going to start right here. Now, if you've been watching my videos for any length of time, which if you haven't, you need to hit that subscribe button and give the video a thumbs up. We've been talking about this thesis about the extended cycle. And so Cryptoviser, who's a prominent figure in crypto analysis, suggested the next Bitcoin cycle might extend longer than previously anticipated, projecting a peak between January and September of 2026. In a 30-minute presentation titled Charting Our Way Through Chaos, Tour integrates blockchain analysis to substantiate his projection. He says this report comes with a bonus 30-minute presentation, Charting Our Way Through Chaos, which I gave a couple of weeks ago. In that presentation, using AI blockchain analysis, I suggest a longer Bitcoin cycle with a top sometime between January and September. His outlook on the extended cycle arrives amid renewed scrutiny of how macroeconomics factors influence digital assets, a theme he previously explored by questioning whether Bitcoin's highs are linked to the Trump administration's Federal Reserve policy stance. Now, here's the deal. We've been talking about where the extended cycle will land, because Raoul Pal has been talking about this for quite a while as well. He believes that we are also saying macroeconomic data suggests the current crypto cycle top could extend into Q2 of 2026. Now, here's the deal, guys. This may happen. I don't want you guys to listen to my videos and say, well, Cryptoviser is saying this is never possibly going to happen. In my current thesis and strategy, I don't think that we are going to have an extended cycle. Guys, this is the same nonsense that we heard in the 2021 cycle. If you go back to my channel and look, in the beginning of 2022, I posted a video that said I sold. And in that video, I told my viewers I sold large quantities of my bags because I already saw that we were in the downtrend. We were in the capitulation zone. We were past the complacency zone. I mean, we were literally in anxiety when I sold. And how did I know that we were in anxiety? Well, I didn't until I posted that video. And then I saw everybody freaking out and downvoting the video, telling me that I'm an idiot. I don't know what I'm talking about. We have an extended cycle that's going to go into the middle of 2022. And by the way, other YouTubers were the ones pushing this. The narrative about this extended cycle into 2022. Well, what happened in June of 2022? Market bottomed, right? The majority of the market bottomed. A lot of altcoins bottomed. And that's kind of what we're lining up to see this cycle as well. I do not believe in the extended cycle. Now, it could occur, but nothing that I have seen or analyzed in this market has indicated that it's even minutely large percentage potential. I mean, I think that an extended cycle is maybe 5% chance. Very, very unlikely, based on the metrics, based on the data. and based on this just being repeated from the previous cycle, which was completely false in the previous cycle, but now they're repeating it. Like, oh, we're going to have another, this is going to be an extended cycle. In my view, we're actually early because when we're talking about like dates, not days since the halving, more like months. Because remember, this cycle in 2024, the Bitcoin halving was 1 month before it was in the previous cycle. So this cycle, I think, was in April. The previous cycle was in May. And so that pushes the rest of these market milestones up at least a month, if not more. And so in the previous cycle, most altcoins topped out either in that June timeframe or in September of 2021, right? And so September of 2021, 1 month before that would be August. So when I'm recording this, we're in August 2025. And if you look at the Bitcoin halving tracker, we're within 50 days, within 2 months of the 2 previous cycle historical tops when we're talking about days since the halving. And so this extended cycle narrative, I don't see how this actually goes into play. And by the way, it's not just me thinking this, it's also looking at the data in the markets. And so let's look at some of this data. First of all, I'm not the only one who believes this, right? And there's a lot of people who are like, Cryptoviser, you're the only person in crypto that thinks that we're at the top of the market. It's like, well, that should be an indicator that maybe we are, right? You want to be early, not late. Once the main YouTube channel starts saying that we topped out, it's too fucking late. It's too late. And I'm talking about not like a little bit late, very late, right? When the big channels start to say, well, I think that we actually are not in a bull market anymore, we're going to be down here in denial or panic. And guarantee you those other channels are going to sell at much higher levels, right? Here's the deal, guys. I told my viewers for a long time that I wanted to be out before this euphoria phase, before this complacency phase. And by the end of the cycle, I wanted to be out of crypto completely, 100% out of crypto. And I think that we are on pace to achieve that before this panic stage, right? Because once you get into the panic stage, everybody is selling and there's no liquidity coming in. And by the way, this can last for 6 months. This could last for a year, maybe a little bit longer, but typically the bear downtrends happen within 1 year of the top. And so that means by this time next year, the market is going to be much, much lower than it is today. And so do you want to take that risk of getting into those end stages where people are, the selling is just dominant in the market? Because then you selling even a small portion of your portfolio can push the prices even lower. Toby Cunningham, who is a well-known crypto influencer and host of a podcast, said, I'm hearing the 4-year cycle is no longer valid and we're about to go on a multi-year bull market. I don't know who needs to hear this, but this is the type of talk that happens near the top of bull markets. This is one major reason why most won't make a cent this bull run. Completely agree. I mean, he said it perfectly, right? The idea, and especially coming from, maybe not Tour, he's more of an analyst, but Raoul Pal, right? He used to work on Wall Street, like trading, big money. And he's saying that just forget about the cycles. Michael Saylor, right, on Wall Street, taking out debt to buy Bitcoin, is saying, no, don't worry about it. Never going to have a bear market again. It will never happen. It's not going to occur. I mean, guys, when you start to hear that, those are the indicators. Get the F out. Get out of the market. And the more you hear it, the more people that start talking about it, that is your signal. That is your signal. Because here's the deal. People who listen to Raoul Pal or maybe Tour de Master, they probably think, oh, they're not selling any of their coins. They're just telling us when it's going to top out. No. That's not what they said. They didn't say they're not going to sell their coins. They just said when they think the top of the market's going to be. So while you're waiting for the middle of 2026 for the top of the market, they already sold. Like, they already did. Maybe they didn't sell by now, but they are going to definitely sell by the middle of 2026, 100%. And if we think about the larger picture, which we're going to get into in a minute, it will also indicate where we are in the cycle and what you should be getting bullish for. Not bullish now, bullish for. Toby Cunningham also posted this. He said, "Who here is enjoying the final phase of the bull market? I sure am. Looking forward to the masses piling in soon. Enjoy the ride, my friends." And so seems to be in agreement with what I'm saying on this channel for months now, that we are entering the final phase of the bull market. And the final phase could last for weeks, months, days, maybe even potentially years. But I'm more likely to say within a month or two, it's over. And I really don't understand, like, even for the newbies, like, they think that, like, everybody's just going to wake up one day and Rob Powell's going to say, "Okay, guys, it's now the time," or Tour de Mestre is going to go on social media and say, "Okay, guys, tomorrow at 9 a.m., everybody wake up, go on your exchange account and sell all your crypto. We're all going to do this on the same day at the peak of the market, and we're going to do this in a very orderly fashion." Not how things work at all. Not how things work. And if we look at MicroStrategy, right, because MicroStrategy is the risk factor. They've been the purchasing, the whale purchasing for the last couple of years, increasing their buying, increasing their debt issuance to buy more, and they're starting to slow down. And not only are they starting to slow down, the interest in their products is starting to slow down as well. And so they may not be able to raise as much money. They may not be able to buy as much Bitcoin. And then how is the market going to react to that? It's not saying there's anything wrong with MicroStrategy or that MicroStrategy isn't a good company. I mean, they have such a large quantity of Bitcoin, right? Over 600,000 Bitcoin. And so they already won. They already won the game. But the deal here now is, like, what is going to happen to the stock? And do you want to hold it during the potential downturn? Well, that's a question you got to ask. Because if you do think that we're in the end of the cycle, well, you got to start making action, right? On August 7th, Tour de Mestre, who we just covered in that article, said, "And we're live. 2.5 years into the bull market, I created a completely revised update of how to position for the Bitcoin boom." Again, 2.5 years into the bull run, he's telling you how to position for the Bitcoin boom. If we're 2.5 years into the bull run, and it's a 4-year cycle, what happens in the final 2 years of the cycle, or year in the cycle? Bear market, right? A 4-year cycle is bull market, bear market, and sideways trading in between, right? So maybe a year bull, sideways trading, a year bear, sideways trading, then you get back to bull, something like that, right? In that context. A 4-year cycle is not 4 years of bull run and then another 4 years of bull run and then another 4 years of bull run after that. There are corrective phases during that. As you can see from the psychology of market charts, as you can see from the Bitcoin halving charts, and you can see from any chart in the stock market, even the indices, they take dips here and there. They usually recover from it, but the dip can last for quite a while. So yeah. Matt Cole, who's a CEO of Strive Funds, he said, "This is the mid-cycle in what could become one of the most significant bull runs in Bitcoin's history. From its current range, we believe there is still a path toward a 4 to 10x value appreciation, which would imply Bitcoin price targets north of $500,000. Now, this is from Tour's analysis report. But he says he agrees, and this is an important report. So where we are in the cycle right now, they believe that we can still 4 to 10x to $500,000 in Bitcoin, right? And when I'm recording this video, again, towards the end stages of the bull market, $121,000, 4x from here would be 500 grand, right? What is the catalyst that's going to drive Bitcoin up? People are going to say, well, there's going to not be enough supply of Bitcoin for all the buying. Well, MicroStrategy is slowing down their buying, and also that thesis is incorrect. Eventually, yes, the Bitcoin will run out because there is a limited supply of Bitcoin. But at the end of the day, guys, it has not run out yet, and there's still millions and millions of Bitcoin available for purchase. And the way that these markets work is as the price goes up, you're more likely to sell. I go back to this story that I read a few years back, where it basically said a guy bought a painting at a garage sale for maybe like $50. And he put it on his house and he kept it there for something like 25 years or 30 years. And then he was going to sell his house, and he got the painting appraised. And it appraised for $50 million or something to that sort, like a very high number. And he said that if he didn't have it on his wall and somebody was on his front lawn every day with a sign, the first day, $51, maybe a month later, $200, maybe a year later, $5,000, right? He said eventually he'd probably sell it. He bought it for $50, and now somebody's offering him $20,000 to sell it. He's probably going to sell it, right? But he said, if I had somebody on my lawn every morning, every day with a sign how much they're going to buy it, I probably would have sold before $50 million. And that's the same thing in the crypto markets, right? Is that if you're looking at the price every day, you're looking at the price every day for a reason. It's probably because you're looking for a price to sell at. But if you believe in the long-term thesis of it, don't look at the day-to-day prices, and probably shouldn't be watching these videos either. Because yes, over the long term, Bitcoin is going higher, but there's no catalyst in this cycle, right? Wall Street is already here. BlackRock is already buying. MicroStrategy already created debt to buy more Bitcoin. People can already have it in their 401ks and their retirement accounts. People can now own proxies through the Bitcoin ETFs or all these other products. There's derivatives for these as well. So what's bigger than Wall Street? You know, people are going to say aliens are going to start buying Bitcoin. No, this cycle, for the most part, for Bitcoin, there's no catalyst. There's no path to $500,000. And there's definitely no path to $500,000 saying that we're going into an extended cycle. We're mid-cycle. We're mid-4-year cycle, but we still got 2 years left. And so what historically happens in the final 2 years of the Bitcoin cycle? Well, we have a corrective phase, as you guys can see here, correction, and then we start to move up in anticipation of the next halving. And so I anticipate the same thing to occur. But we're also going to see diminishing returns as the time goes on, because more participants are in Bitcoin, more derivatives to keep the price in balance. And also these large holders like MicroStrategy and the Bitcoin ETFs, they have no plans to actually sell their Bitcoin. And that brings us to Pierre Rochard, who is a Bitcoin, I guess, maximalist CEO of Bitcoin Bond Company. He said it seems more likely than not that the 4-year cycles are over. Halvings are immaterial to trading float. 95% of the Bitcoin have been mined. Supply comes from buying out OGs. And demand is the sum of spot retail ETPs getting added to wealth platforms and treasury companies. Okay, another Bitcoin maxi saying that we're never going to have a bear market again. The 4-year cycle is over. But guys, the 4-year cycle cannot be over because Bitcoin is on a 4-year cycle. The supply constraints are on a 4-year cycle. The demand is on a 4-year cycle. The price is on a 4-year cycle. It's just the way that it is, right? Yes, we have more sustained buying from companies and people in their 401ks and stuff like that. But again, the 401ks are going to take over where MicroStrategy is leaving off. And so the amount going into Bitcoin is going to basically be the same. This is our new baseline. What MicroStrategy has created by buying and buying and buying on a regular basis, they created a mechanism where it has to continue. Otherwise, the thesis collapses. And so as MicroStrategy is slowing down their purchases, you need the velocity to stay high. And if it's not coming from MicroStrategy, where is it coming from? That's the question we got to ask. And so this is something that we have to think about, because a lot of people keep saying Cryptoviser, nobody's selling their Bitcoin, their companies are not going to sell their Bitcoin. Yes, they are. Yes, they are. TeraWulf. This was their Q2 results, just released in beginning of August. So as of June 30th, TeraWulf, one of the largest Bitcoin mining companies in the US, and by the way, very highly connected to many of the other large industries in the US, like the defense industry and stuff like that. They currently have zero crypto. Zero. They sold it all. It's all gone. Bitcoin mining company, they had $476 million, $500,000 at the beginning of this year, end of 2024, early 2025. They sold 500 million plus all the Bitcoin that they mined in the first 6 months of the year, all gone. But people are like, but Cryptoviser, we have an extended cycle. But Cryptoviser, the supply is limited. Yeah, the supply is limited, but that doesn't mean that there's no supply, right? It's the same thing like when during the pandemic, all the car dealerships were like, oh, well, we have a shortage of vehicles. It's like, no, you don't have a shortage of vehicles. You're just like slow. You're not releasing all of them for sale because you want people to pay over the price. But that doesn't mean that there's no inventory. Of course there's inventory. You're just limiting the inventory. Now with Bitcoin, obviously there's a limited supply. But guys, clearly people are selling their Bitcoin. The big companies are selling their Bitcoin. You have Marathon Digital buying Bitcoin with debt, MicroStrategy buying Bitcoin with debt, Anthony Pompliano's company buying Bitcoin at, by the way, all-time record highs. This is the most euphoric that we have been, I think ever. And people are like, no, Cryptoviser, we're not in euphoria. It's like, Anthony Pompliano, smart guy, very well connected. I would imagine probably fairly wealthy, right? So he has probably pretty good mentors and advisors in his ear. Literally started a company and is taking out debt or selling at the market to buy Bitcoin at over $110,000. That's their dollar cost average. And for anybody to think that we're not going to go below $100,000, it's complete hogwash. It's complete hogwash. Now, if Anthony Pompliano said, we're going to raise money right now and we're going to wait to buy the Bitcoin, or we'll buy on a regular basis, we'll like dollar cost average in with this pot. But this is not what these Bitcoin strategy companies are doing. They're just, as soon as they get the money, buy. Get the money, buy. Get the money, buy. Like there is going to be a demand and supply imbalance forever. And that's just not the case. And so what's going to happen to these companies in a downtrending market? Personally, I think our new baseline for how low we're going to go is MicroStrategy's dollar cost average. I think if that we go under the $73,000 range at some point in the future, things are going to get very, very interesting. Very interesting. We are very close to that. I mean, $120,000 from $73,000 is not that big of a difference at all. And so we have to keep that in mind. But there's also other indicators, because you can't just look at crypto. You have to look at the overall market to understand where the sentiment is. This is why we'll get into that in a minute. So this guy, Wealth Squad Dividend Main, who is, I guess, a dividend investor, he said, I can't lie. Misty, which is Yield Max's MicroStrategy, and you guys know we've covered Misty before. Basically, Yield Max is what's called a covered call option ETF. So basically, they sell covered calls on MicroStrategy, and then they make money off the premium that they're getting for selling these calls. And at the end of each month, they distribute dividends to the shareholders. Now, keep in mind, we've covered this before on the channel, and I do think that generally speaking, a small portion could be good to have in some of these products, right? But in an uptrending market, because in a downtrending market, the dividends are going to be terrible, terrible. But this is also an indicator, because for me, what we saw in the last cycle with everybody focusing, like what brought down crypto in 2021 and 2022, it was over leverage, right? FTX, Celsius, Voyager, 3 Hours Capital, BlockFi, all these companies were saying, give us your crypto, we'll give you a percentage interest. And so everybody was chasing the yield, 10% a year, 12% a year, 20% a year. Everyone was chasing the yield. But they were all borrowing and lending from each other, right? FTX was loaning to this one, who was then loaning that same money to this one, loaning the same money to this one. I mean, it was just, all of them were doing the same thing, just loaning and borrowing to each other with the same money. It was all fake. That's why the market collapsed as hard as it did when all that broke. But what we are seeing now is that it seems like these leveraged products are the risk factor this cycle. And let me explain why. So now you guys have a general understanding of Yield Max Misty, right? You buy the share, you get a certain percentage every month. If they make money, that gets distributed to you. Now, let's be clear. Misty historically is giving about anywhere from 6 to 10% per month Most ETF dividends or company dividends are like 7% for the year or 2% for the year. We're talking about 6 to 10% per month, which basically you can recoup all of your investment after about a year in the dividends if it stays at that level. But it's been performing very well for about 2 years now, and now retail is starting to get euphoric about it, as Wealth Squad Dividend Main says here. He said, I can't lie. Misty has those fat dividends, and Bitcoin will be moving up for a while. I think MicroStrategy will experience volatility for years. Plus, there's no tax implication since I have my shares in a Roth IRA, a retirement account, which is tax deferred. I think this fund will break records as far as longevity. Now, again, he's doing this in a Roth IRA or 401k, so there's no tax implication. So that is a smart thing. Because if you are doing this in a regular account, your dividends are taxed like a regular income. So $6,000 could go down to $3,000, $4,000 very quickly, and you have NAV erosion, which we're not going to get into in this video. But effectively, he thinks that this is like the retirement plan, right? Which a lot of people are thinking. It's not just him. Let's just be clear. He just wrote tweets that I thought were good for the video. But he said, man, I'm sold. Lump sum of my cash into Misty. The payouts from the dividends will buy MicroStrategy and Bitcoin in the IRA. Keep doing this until the fund doesn't exist anymore, but who really knows when it will stop existing? Now, what I like here is that he's looking at the risk-reward analysis, right? And that is a good thing, but a lot of people are not. They're just going to take what he's saying and say, oh, I got to do the same thing. He understands that this may not last forever, right? That these great returns may not last forever. But while it's there, let's capitalize on it. And I think that's a pretty level-headed analysis of a product to determine whether you want to invest in it or not, right? He said, if a person is bullish on Bitcoin and really believes it can hit and surpass $1 million, they can turn this machine on and let it assist with the wealth building process while they focus on other things. I can't believe I've been blind for this long. Now, as much as I say I like the risk analysis, it's also extremely euphoric because, as I've explained, MicroStrategy cannot maintain their MSTR price. It's not possible in any possible way. A lot of possibles there, but it's impossible, right? Because it's already trading at a premium. So we have basically, a 30%-ish reduction in the price right here, just to bring it to the 1 MNAV. And a 30% reduction of $400 would bring the price down to under $300, just to get on par with their underlying assets. And so in my view, MicroStrategy price is going to plummet if Bitcoin starts to turn. And so if that happens, these MSTY dividends will probably be much less. Maybe not at the beginning because people will still be extremely bullish saying, oh, it's going to go up. But these are indicators. People are putting all their money into these products in end stages of the cycle, thinking the flywheel is going to continue forever, and it won't. There is opportunity to make money in yield max products. I don't want to take that away from anybody. But there is a lot of risk involved here, and they could go to zero. Let's keep that in mind. We also have to keep in mind that MicroStrategy now has 4 debt products, which are all highly off-valued, I guess you can say, and don't really make a lot of sense in a bear market. Right now, we're in a bull market, but what happens as we rotate into a bear market, which will occur? What's going to happen to all of these debt products? Are these going to be new opportunities? And if they are opportunities to buy into, you want to buy, guys, you are going to get for some of these products, like take this product, for instance, Stride. You get 10% dividend. Now, this is if MicroStrategy can pay it. They may not be able to pay it, but let's say they can pay it. You get 10%, but you're getting 10% on a $100 par. So if you're buying it at $86 and you're getting 10% on $100, right? You're actually getting $10 on an $86 purchase. So $10 divided by 86 is almost 12%. So your actual dividend is about 12% because this is lower than the par of 100. And so in a bear market, if these debt products start to collapse and they can't pay the dividends and all of this, I think MicroStrategy is going to be fine in the longer term. But in the short term, this could cause a lot of problems for MicroStrategy and their debt products. And this may be a great opportunity to get them so that when we get into another bull market, MicroStrategy will pay back those dividends because I think they accumulate the dividends even if they don't pay them. And that could be a huge payout, right? But in order to buy these in a bear market, you need to have money on the side, meaning you have to sell some of the crypto that you have now or stocks that you have now, keep saving or make more money, right? And so you have to make the decision what you want to do with that. But it's something definitely to keep an eye on because a lot of people are looking at a lot of these products and saying, oh, I'm going to retire off of MicroStrategy. And they don't do any other research into the individual stock or what the movement is. Because if you look at MicroStrategy, this is, in my view, completely uninvestable. If you own MicroStrategy, it's almost a guaranteed loss, personally, in my view. And why am I saying this? Like, how do I know this? Well, if you look at insider trades, all of the executives are selling their shares, all of them. In 2023 into 2024, Michael Saylor sold all his shares, 20 million shares, something like that. Now he has 20 million more, and people are like, he didn't sell any of his shares. It's like, no, he did sell his shares, but he got more shares because of this whole flywheel. Guys, the insiders, the big money, they're set. They don't have to worry. Like, look at these executives at MicroStrategy. Some of them are buying. Keep that in mind. Some of them definitely are buying. But we're also seeing a lot of sales. You can see right here, the number of shares bought in the last 3 months was 268,000. Number of shares sold, 195,000. So yes, there's a net positive. But if you look at the last 12 months, it's a net negative of 353,000 shares sold net from insiders. So if you're so bullish on MicroStrategy and you're buying at all-time record highs on MicroStrategy when you know they're diluting the shares and you know the insiders are selling, explain it to me. Explain it to me. And by the way, that we're not even taking into account where we are in the cycle at the top of the market effectively. And so this creates a situation where the MicroStrategy bull, and the reason I talk about MicroStrategy so much, guys, is really because it's the risk factor of this cycle. It's the FTX of this cycle. Now, it may not collapse like FTX collapsed, but the price from the stock perspective, I expect to see a collapse. How low? I don't know. I definitely under $200 and potentially under 100. It really depends on what happens to the Bitcoin price. No doubt in my mind, if we go below the dollar cost average for MicroStrategy, I would expect to be potentially in a negative premium for the MNAV. It would be called a discount. It still probably wouldn't be investable at that point, but it's something to keep an eye on. And that brings us to the Ethereum treasury companies, because a lot of people are saying, Cryptoviser, let's just rotate into Ethereum treasury companies. But the difference this cycle is that now that all these companies are doing the same thing that MicroStrategy is doing. They're selling shares in the open market. They're taking out debt. And while this may give us a short period of time, a short window where we see the Ethereum price go up and even the stock price is going up, the dilution is going, this is why we're going to see 90% drops in the bear market. Because of the dilution, because of people buying these assets, not understanding there's dilution here. And the MNAVs are going to be high. So take BitMine, for example. I was keeping tabs on the number of shares these companies hold. And so since in July, BitMine had about 80 million shares outstanding. Now they have 112 million shares, meaning they increased the shares by 30 million shares in just 3 months. And that would be about 40% increase from what it was. Now imagine Bitcoin increased the number of Bitcoin by 40%. What do you think is going to happen to the valuation? It's going to correct. And so in my view, what we're seeing is just an imbalance in the market, right? Ethereum prices are going up. These companies that are buying Ethereum are going up, but it's really just the market catching up to the narrative. But the actual market itself, Bitmine should not have really that much of a higher price because they keep selling more shares on the open market. But Ethereum is going up, which is keeping the price of these stocks going higher. So it allows them to keep selling more shares to buy more of the asset. But again, a lot of these companies are buying the assets through private sales. They're buying it through consensus. They're buying it from early investors in Ethereum. And so these are not open market transactions either, the same thing that we have seen with MicroStrategy. And so I don't think that the price movements are that real right now, or fundamentally based. That doesn't mean they can't go much higher, but there's a lot more risk there, right? When something's fundamentally based on the narrative, on the valuation, on the assets and all of that, it's investable. But when there's a disconnect, it becomes uninvestable. And so when we look here, right, just on the MNAV, and now this is may not be up to date because of how many shares they've added, but let's just use the numbers that they have listed here, right, as an example. So Bitmine, it's showing the MNAV, meaning the stock price valuation versus the underlying asset valuation of the Ethereum that you hold as a shareholder, is basically double, which means that the price of the stock needs to come down by 50% instantly. Then you take into account the dilution that hasn't been absorbed by the market yet. That could bring the price down another 10%. And then you have what happens if Ethereum drops in a bear market, much lower than where we are, 2,000, 1,000. Whether that's going to happen, I don't know. But if it does, how is this going to impact the price? Again, we're at a 50 or 60% drop already just based on the other fundamentals that we just talked about. But then you have the price of Ethereum coming down. And now you could be down 75, 80% on the stock within a very short period of time. And so I'm not saying that these are not investable. I don't think that they're investable right now. There is money to be made, I guess you could say trading or longer term. But again, I think that the best kind of move forward scenario is really just saving as much money as possible. And some of that may be through selling some of the crypto, selling some of the stock. That way, when we get to that corrective phase of the market and better opportunities to enter some of these positions, we will be able to do it. But again, you have to have the money to make that happen. Now, Row Rider on X, about 7,000 followers, said, guess nobody learned from July when they ran literally the exact same pump and dump pattern before the CPI. And so you can see that in July, the top was $123,000. And where are we right now? We're very close to this number. Now, we may go above it, but the same way that we're seeing MicroStrategy struggling to defend the $400 price level, because since we've come below $400, MicroStrategy is in like a spiral down because they can't defend this $400 level. They can't really raise more money from debt. So they're not purchasing more Bitcoin. That's a problem. That is a definite problem. Row Rider also said, many say the Federal Reserve won't cut rates with elevated core inflation and all-time high in markets, but they cut in 2024, last year, at elevated CPI, full employment, and all-time high markets. If you haven't caught on yet that the Federal Reserve doesn't give a single shit about inflation, their only mandate is saving boomer bags. And I would agree, guys, it is very interesting what's happening with the generational shift. The boomers are moving on very, very rapidly. And the younger generations don't want what they're selling, right? They're selling gold, jewelry, cars, homes. I mean, I've literally seen houses on sale, not on sale, but for sale, I should say. And these homes were owned by the owner for 70 years, 50 years, something like that, and literally never been updated. And they're pricing this like the younger or the boomer generation is pricing it like it's worth $2 million, and it's like nobody's buying it. Nobody, and then they'll let's lower it $5,000. It's like, so you lowered it from $1 million to $995,000. You think that's going to make a difference? Nobody wants to go and gut reno, a 1970s home, right? But the boomers think that they do, but nobody's buying it, right? It's the same thing that we're seeing in certain markets. If you think of Las Vegas has been struggling for quite a few years now. And if you think about it, right, the younger generation doesn't like gambling. They don't like to go and just give their money when they know they're going to lose it. And the casinos are not making it easier to win. They're making it harder to win. So that it's kind of their fault as well. But at the end of the day, right, the millennial, Gen X, Gen Z generation, they are not this in the same financial situation or in the same social situation that the boomers were. And so that industry of like gambling and casinos and stuff like that, it's no longer as exciting as what you're seeing like with the Sphere in Vegas and the experiential type of fun things to do. And so again, we're seeing this generational shift from what boomers want and like to what the next generation wants and likes. And nobody's buying what they wanted and liked, right? I mean, the newer generation wants crypto. They don't want stocks. But who's selling the stocks? The boomers. And so who has to buy those? The Federal Reserve, right? So Roll Rider also continues to say, not sure why Trump is such a rash. With the exception of 2019, every time the Federal Reserve starts a major rate cutting cycle, it signals the market has topped and the bubble is bursting. I would kind of agree with that. I mean, if you look at what happened in 2020, right, at the pandemic. Now, a lot of people are going to say it was just the pandemic, but before they shut down the global economy, before people really knew about the pandemic thing, in the beginning of March, 2 weeks before they shut down the global economy, they lowered rates. And when they lowered rates, the market cratered. So just because the Federal Reserve, if they do cut rates, it may seem like a good thing. It could also be a really bad thing for the market because it says where the economy is. And if the economy is not doing well, it's not going to be good for the markets either. And so finally, Row Rider said, long duration bond yields are flying as Trump continues to bully the Federal Reserve independence. If he would quiet down, the Federal Reserve would still do what they always do and keep bags pumping. But since he won't, the bond market is revolting and betting on out of control inflation. Now, we got the inflation in August and it has come down 2.7%. But is this going to be enough to get the Federal Reserve to lower rates? And personally, guys, I don't even think it's going to matter if they lower rates by a little or a lot or whatever, right? Because at the end of the day, we are in the euphoric phase where people are buying back higher after they sold and people are saying that they missed out. You can never miss out if you're in profits. Ever, ever, ever. And so with that, I want to know what you guys think about where we are in the cycle, where we're going, and really where the sentiment is. What are you doing in your portfolio? Let me know down below in the comments. Don't forget to give the video a thumbs up, hit that subscribe button. I'll see you when I see you. Invest responsibly and crypto on.